Welcome traders, let's delve into the Forex market outlook for the upcoming week. For today we will discuss some of the major Forex pairs and some of the patterns emerging. And you are with André Cardoso. Thank you very much for being here. It's always a pleasure to share my work with you. Let's start with the cable. We saw a retracement after a bearish butterfly pattern formation with attention on potential moves towards 126.20. Let's pay attention to this potential pressure zone since we will be trading the 38% Fibonacci retracement level, the 200 moving average also approaching from below, and we have the golden Fibonacci extension just a few points below at 25.95, which may exert some pressure for the cable. Let's move to fiber. New daily fractal resistance was printed at 109.16 after this previous momentum or this previous swing to the upside, almost forming the bearish outbat pattern as mentioned before. We were paying attention to these potential pullbacks, so at some point we were expecting the retracement. Eyes on a bullish scrap pattern, possibly emerging around 107.07. So we are now approaching the Fibonacci, the 61.8% Fibonacci retracement level at 107.21. Just a few points below, let's say we have a cluster box between multiple golden Fibonacci levels that I think we should pay attention to for the fiber. Moving forward, the Aussie also with another pattern emerging below the current price zone. Nice reaction to the NFP data last Friday, very similar to the other dollar related pairs, with our initial attention which was drawn to the 65.74. so this is the 38% Fibonacci retracement level, which should watch for a potential bullish scrap pattern formation around 65.22. The Kiwi actually a nice decline after or post NFP, with potential bullish pressure now emerging at the previous resistance and the most recent fractal support. Also, we have the 38% Fibonacci level at 60.76. We have the moving average also approaching from below, and the 224% Fibonacci extension, the bullish shark pattern completion point. So this actually acts as a strong pressure price zone for the Kiwi, as you can see. Now the Aussie versus the Kiwi, showing a bullish scrap pattern formation with targets projected at 108.33. This is a default target for the pattern. We should not ignore the eventual pullbacks that may happen during this process, but ultimately this is the default target for this bullish scrap pattern extended to the golden Fibonacci extension level. So this pattern was projected a few weeks before the completion point. Actually, I projected this pattern before the 113% Fibonacci extension level. Once the price starts to approach these levels, usually I project multiple Fibonacci levels where the price may feel some pressure, and in fact, if you pay attention, as soon the price achieves the 113% Fibonacci level, it enters into a sideways moving process, moving sideways, as you can see here. Let me try to put this more clear. 113% Fibonacci extension at 108.23. And since then, the market entered into this, let's say, period of consolidation or moving sideways, as you can see here, and then finally broke the support level, completing then later a few days later, completing the bullish scrap pattern. This is one alternative to the alt-bat pattern. If the market extends to the golden Fibonacci, you should pay attention to this price reaction, an attempt or a bounce attempting to recover from the recent move to the downside. The reaction I will not expect to be a full reaction or a full recovery. Okay, we trade based on the default targets and expectations for those patterns, and that points to a modest 108.33. So this is your default target for that bullish crab pattern for the Aussie versus the Kiwi. Moving forward, dollar versus the Canadian, so we are talking about the loonie, finally broke the resistance at 137.34. We have a bearish shark pattern at 38.19, so we should pay attention also. So caution is advised with this bearish shark pattern possible emerging at the golden Fibonacci, which may put some pressure and force a retest of this previous resistance that we are now breaking. So we are now breaking the resistance, and the formation of this pattern should force a retest of these previous highs. And then you will see if the price will continue to trade higher or if it will recover the previous resistance, and that will open the door for more downside. But this will be a crucial moment. If that happens, it will be crucial for the pair to decide if it will recover the fractal resistance or if it will turn it into a support level and trigger more momentum to the upside. Let's observe. For now, we will pay attention to the potential formation of the pattern. Next, Norwegian krone. I shared this pattern before and last week on Twitter. I blogged about this pattern. I posted the thread on the social. So probably if you are seeing this video, you have seen this pattern before during last week. We are talking about a very sharp pattern, reversal extension level, golden Fibonacci extension. We expect a pullback, and that pullback should target the 50% Fibonacci retracement level, which is placed at 1060 or 1059, just a few points below the previous daily fractal resistance. Okay, daily fractal resistance right there, but also the previous fractal support level, the weekly fractal support from 9 April. Okay, so as you can see, we have a new fractal resistance right there at 1062.74, just 1 point above the previous fractal support. So I will not be surprised to see the Norwegian krone retesting these levels again, and eventually, if that happens, we will be talking about the bullish 5-0 sequence. Let me put this in the different colors just to identify this pattern for you. So we have a very sharp pattern completed at the golden Fibonacci level. Okay, if the pattern pulls back to the Fibonacci, to the 50% Fibonacci retracement level, at that point you will face a bullish 5-0 sequence, and that should trigger a move or a bounce. Okay, eventually, if that happens, we will start to consider the potential move as a symmetrical move to the upside, but it's too soon to project this. Of course, actually, it's too soon to project the bullish 5-0 sequence. We have, for now, the bearish shark pattern completed at the golden Fibonacci extension level. Don't be surprised to see the pullback for the pair. As you can see, we have also the 50% Fibonacci retracement for the previous shark pattern, the same pattern that we are seeing now, but of course for the bulls, and on a different degree, a higher degree bullish shark pattern. This one printed at the 224% Fibonacci extension level, so this one was pushed to the 224% Fibonacci after the consolidation period at the 61.8% Fibonacci extension. So we have the first golden Fibonacci extension to consider, the 161. The price should trade higher, searching for the 50% Fibonacci retracement. It did not. Sometimes it happens. it created a consolidation box, as you can see here, very clear, a nice sideways moving process, nice support, nice resistance, and once the price breaks the support, triggers the next Fibonacci extension level, 224, 1053, bullish sharp pattern completed, kind of a double bottom, it's not a technical double bottom, but we can see as we face a false breakout of the previous support level, and once we confirm the false breakout below, and that is only confirmed with the violation of this previous resistance, once the price breaks above this resistance level, we consider that false breakout valid. And once that happens, we'll search for the golden Fibonacci of the last swing low. Very simple process. Identify a false breakout below the support. Once that confirms, we search for the golden Fibonacci of the last swing low, and that should put some pressure to the downside. So that being said, and to simplify the process, we have a pattern that may put some pressure to the downside for the Norwegian krone. Let's see how it will behave for the next sessions. Euro versus the pound, we have also we have breached support post NFP data. We have also I posted on socials the potential technical double top at some point. We were facing the potential technical double bottom, I'm sorry. But then with the NFP data, the price broke the support levels, and of course invalidating the sequence and the potential double bottom. That being said, moving forward, we are talking about the potential crab patterns projected, let's say 84.42. So this is the bullish crab pattern completion point that I projected before weeks ago. For the pair, just in case the price breaks below this support level, I started to project this pattern below, and then we have a lower degree bullish crab pattern projected in convergence with that same pattern. So we have a bullish deep crab pattern at 84.42, and we have a bullish crab pattern at 84.47. The reason why it's that a deep crab pattern is because of this pullback. Okay, so this pullback defines how deep or not it is the previous pullback. So we have a first swing high, and we have this deeper retracement that defines the deep crab pattern once completed. Of course, we need to wait for all this swing to define the pattern. But once we saw the pattern completed, we define if it is a deep crab pattern or not, based on this deeper retracement. And at this case, we don't have a deeper retracement back to the previous support, so we don't consider this a deep crab pattern. That's what defines, just to explain you, just a few parentheses, just to explain you what defines a deep or what differentiates a deep crab pattern from a default crab pattern. That's only how deeper was the point B of this retracement. Okay, this is not a deep crab pattern, even though it's not relevant. They both point to the same extension level, just to clarify that situation. So we have multiple crab patterns projected at the golden Fibonacci level. As you can see, different levels, different degree levels. Let's say a higher degree bullish crab pattern and a lower degree bullish crab pattern. The lower degree pattern should target the 38% Fibonacci level of the swing that completes the pattern of all the patterns, so of all the length of the pattern projected as a 38% Fibonacci retracement level. As you can see, that points to the previous resistance, the previous support, I'm sorry, 38% Fibonacci level. And if you want to consider the higher degree bullish crab pattern, that also converges with a nice price structure. So if you enter the price, let's say 42.84, 42, 38% Fibonacci retracement level, that also converges with the previous fractal support and weekly fractal support level. So always consider the default projections for those patterns. Euro versus the pound, pay attention to the crab patterns projected below. Let's move forward to the euro versus the kiwi. Showed signs of recovery with the bullish shark pattern formation. We should keep an eye on at the 50% Fibonacci retracement level. This is the default target for the pattern. At some point I will expect the price to achieve those levels, unless of course the price breaks the support level, which should trigger or favor more moves to the downside and eventually a retest of this monthly fractal support. As you can see, we have a nice ascending trend line acting as an element of support for the pair. Nice reaction to the upside, and we are now facing the golden Fibonacci retracement level at 75.79. So this is a nice place to consider, at least for those who are searching for opportunities to position to the upside. Of course, this may be a nice price zone to consider that, of course, assuming that if the price breaks below this support level, you should not try to hold this trade for undetermined periods of time. So we assume that if the price breaks the support, that may favor more downside for the pair, even though golden Fibonacci retracement may offer a nice and friendly risk-reward opportunity for those who search for moves to the upside, eventually searching for the moving average also approaching from above, actually pointing at 78.11. We have the default target for the bullish shark pattern at the 50% Fibonacci level. Let me also confirm we are not approaching the 38% Fibonacci yet. That being said, pay attention to this price action for the euro versus the kiwi. Finally, to finish, pound versus the Aussie. Finally broke above the resistance, daily fractal resistance at 92.45. You should pay attention to the symmetrical projection at 94.36. And if you want to consider the possibility of a retest of the monthly fractal, which is also feasible, we should wait for the bearish crab pattern projected at the golden Fibonacci levels, as you can see, converging with the previous highs from March. So that being said, that may offer also a friendly risk-reward opportunity to be involved with the pound versus the Aussie, the bearish crab pattern at 95.75. So that's all for today. I hope you enjoy. Have a nice trading week, everyone.